finished a little bit softer today. Your thoughts on the outlook for a stock like Navitas?
I mean, there wasn't a huge reaction in terms of the share price, but if we have a look at Navitas, it does look like some of the regulatory issues that have been plaguing the stock are now passing. And one of the things moving in Navitas's favour over the next financial year is the fact we are seeing the Aussie dollar falling. So enrolment into some of the courses in Australia do become cheaper, so that should start to work in its favour. So all up, I think Navitas, there has been a volatility in earnings, as Jeremy has mentioned, and that's unfortunate, but that does seem to be passing, and we are starting to see a positive impact from that falling Aussie dollar.
Look, more broadly, your thoughts on the session today?
Well, overall, we saw a pretty flat session. I think one of the themes to emerge once again this week is that we saw a bit of selling in those defensive areas. So we saw the healthcare, the staples, utilities and the property sectors being sold off, and instead the material sector once again seeing gains. So this does seem to be a theme that's been emerging throughout the last month. So that continued on. Two key pieces of economic things that we were watching, Glenn Stevens' speech and of course that drop in the Aussie dollar. So some of those stocks with exposure to the currency doing well, QBE Insurance, Macquarie Group, ResMed, these were all standouts today. We also saw a rise in Brambles as well as Amcor, and of course the building approval numbers, which were down 6.9%, so that was a surprise, and that's the second consecutive month of falls. One of the things I was watching on the market today was JB Hi-Fi. Now this is a stock that's actually hit a 52-week high today, and surprisingly the stock is up a massive 114% over the last 52 weeks. Now the consumer discretionary sector has been doing well. It's up 30% over the past 52 weeks. And if we have a look at some of the retailers, there's been some good performances. The Reject Shop's up 71%. We've seen Premier Investments gaining around about 60%. And we've also seen Breville Group around about 56%. So it does look like some of those cyclical areas still coming into favour with investors. So it does look like we may be seeing some more money flowing into these areas. The stars in this consumer discretionary space throughout the last year are though G8 Education, so looking at childcare centres, that stock's up over 100%, and REA Group, which is also up over 100%, so realestate.com. So I think that consumer discretionary sector seeing a lot of positive momentum there, and stocks like JB Hi-Fi doing well. The other thing is the exchange traded funds area, looking at IAA. Now this is the Asia 50 fund. It holds stocks like China Construction, Taiwan Semiconductors and Samsung. These were the top three holdings in July, and this is also one that saw a 52-week high. So this is up around about 20% over the last 52 weeks. So outside of the financials and the materials, there's a lot of interesting things going on in the market, and overall, while the market was flat, we've seen some pretty good performances over the last year.
Today, look, it seemed to book a pretty decent increase, but it wasn't reflected in the price action today.
I think the thing is, if you have a look at Woolworths, the sales number, the headline number, looks quite attractive. On the quarterly basis, you know, total sales up by 8.9%. For the year, it's up by 4.3%. But if you have a look at it on a normalised basis, because of course we've seen an extra week in the year, and the way Easter's played out this year, it doesn't look so attractive. In fact, fourth quarter normalised sales only up by 0.8%, and for the year up by 2.4%. So those numbers signalling a very weak fourth quarter environment. We have a look at fourth quarter food and liquor, up by 2.9% for the quarter and up 2.7% for the year. And of course, deflation still playing a very big part in that area, with deflation coming in at 3.5% for the quarter and 2.9% for the year. Not only that, we also saw Big W putting in a pretty weak result. And what we've seen is poor weather translating into poor clothing sales. So I think that was one of the concerns of the market as well. So while the headline number, you know, quarterly growth of 8.9% looks really attractive, on a normalised basis, that's 0.8%. So not so attractive, reflecting a weak environment, and Woolworths shares down by 1.6%.
What do you think the outlook for this company is, Julie? I mean, it's one that is very widely held. It's been a good return for investors. Some question whether or not it's going to be able to maintain that. We've seen a little bit of dip in recent times.
And I think that's a key question. This is a mature company. It's looking at growth areas like Masters to try and drive growth, because really in the food and liquor business, where the majority of earnings is made at the moment, what it's actually doing is it's probably starting to cannibalize its own business. It's still seeing new stores opening up, but the fact is that this market is pretty saturated with Woolworths and Coles. So just opening up new stores probably eats away at the sales of some of its other stores in the same type of area. So if we have a look at Woolworths, really just seeking out that growth, and that growth was supposed to come from building up things like Masters, but The costs there have blown out, so it does look like things like the break-even point for its Masters business are a little bit later than what the market expected. So looking at that traditional food and liquor business, it's really hard, and that's being shown through the supermarket wars, where we are seeing deflation, and of course the huge cost cutting that we've seen in the area of things like milk to try and drive sales in this area. So a really difficult business, I think, the food and liquor part, and in fact cannibalisation coming into it for Woolworths, and I think really it needs to seek out new drivers of growth, things like the master stores, and that's going to be the challenge over the next few years.